how to create a profit and cost model. I'm just going to explain, and how to prepare a spreadsheet modeling and do analysis on the basis of this. We have couple of files. These are the data files. First, I'm going to open the first one, and which will show the profit and cost model. And the modeling is art, and how to create models. I'm just going to explain it. So on the right hand side, the mathematical representation that we have here. C stand for cost, is the total cost. V is the unit variable cost. F is the fixed cost, and Q is the quantity produced. And the result of this model will be C is equal to F plus VQ. So V is the variable cost per unit, and Q is the quantity here. Let's say we have a 300 total cost per units, 3 in the cost per unit, and these are 100 are the quantities. Let's say change the quantity from 100 to 120, and the amount will be $36,000 plus fixed cost, that will be 56,000. If I change to 100, so it is 30,000. How it is calculated? Just double click on this. You will find like C here, the C4 and D4 multiplying these two figures. Now this is the cost model. Next is the profit model. Profit is the revenue minus cost. Cost we have calculated this, and this is the cost, is exactly the same model we have here. Now for example, the revenue is here $75,000, and the profit will be revenue minus cost is equal to profit. So $75,000 minus 50,000, that will be the profit we will have. Now this is the one model which is known as total cost decision model. And second model, then second file that I'm just going to open, that is the profit model. So profit model is totally based upon the total profit. And let's take an example of this: the unit price, unit cost, fixed cost, and demand. We have 50,000 demand, and but quantity sold is 40,000. On the basis of the sale, we can calculate how much profit we have earned. Let's say we have this information ready. Okay, so quantity, so sales quantity, how much is the quantity here? Let's see, sales quantity, demand is 40 and quantity sold is 40,000, right? So 40,000 is the quantity, and what is the selling price? Selling price here is 40, right? So 40,000 multiplied by 40 is equal to 1.6 million. It's a 16 lakh less. So we will subtract the variable cost and fixed cost. So variable cost is totally depends on the quantity produced or demanded or sale, whichever is less. So 40,000 is the quantity, and what is the variable cost? So variable cost is unit cost 24, right? So we have unit cost here, and in this case that we are going to multiply the quantity with the variable cost, so that will be $60,000. Fixed cost, already we have the fixed cost $400,000, and we have this. So sales minus variable cost and fixed cost will be the profit here. So here what I just want here, I want to put a minus sign, right? So make a total of all these, then we will be able to find here the total profit. So total profit will be $240,000. So that will be the total profit. Now this is the second model that we have discussed. The next file is the net income model. In the net income model is totally based upon the net profit which we earn on the basis of how much the sale revenue we have generated. So in this case, simply we can say the sale is here 5 million, right? So 5 million sale we can find, and cost of goods sold, administrative expenses, selling expenses, depreciation expenses, internet expenses, and taxes. It means all these are expenses, right? So very simple way, put is equal to sign, then sale minus sum of all these expenses, bracket close and enter. So this will be 4 $444,000, that will be the net profit we have earned, right? So this is how we have calculated the net income model. Now look at this. This is the one file, and second we will go with, if in case, let's say I want to delete it and I want to make it once again. I want to calculate the gross profit. So put is equal to sign. The first of all, gross profit, we know the sale minus cost of goods sold is equal to gross profit that we have. Second is the operating expenditure. Operating expenditure will be, uh, make a total of all the expenses that incurred in the organization for the operation of the business. So those are the operating expenditure: administrative, selling, and depreciation. So these are the operating expenditure we have. Next we have net operating income. Net operating income means gross profit minus all the operating expenses will be net operating income. From the net operating income we can calculate the profit or earning before taxes. So it means whatever the income that we have means operating minus interest expenses, that will be earning before taxes. Now we want to calculate the net profit. Whatever the profit that we have earned, that will be before taxes, minus if there is a taxes on that, then next will be the 444,000 net profit we have earned. Same thing that we can just make a modification here, and we want to make a sections like a sale one section, then cost of goods sold, then there will be a profit. After then operating expenditures that we have, total of all these, that will be also deducted, that is in the bracket means minus. We have net operating income, we have net, and internet expenses will be interest expenses that will be deducted, and rest of the money that will be earning before taxes. If taxes are deducted, then we have net income. So this that we have explained about the spreadsheet modeling related to the income statement and how to calculate the net profit.